Have you ever wondered if keeping your money in the bank is the safest and most profitable way to manage your wealth? What if there are better options out there, waiting to be explored? Hello and welcome to our Financial Insight series. In today's episode, we're delving into a crucial question. Don't keep your cash in the bank. Why? This isn't just about challenging traditional wisdom. It's about understanding the dynamics of modern economics. We're going to guide you through 6 incredible assets that not only promise safety, but also potentially offer far greater returns than your regular bank account. From precious metals that have stood the test of time to innovative investment strategies that are shaping the future, get ready to transform your perspective on wealth management. 1. God's money: gold, silver, and platinum. Let's start with what we call God money: gold, silver, and platinum. These aren't just shiny objects, they are the bedrock of stable investment for centuries. But why are they so important? Imagine a world where money is printed endlessly. The more there is, the less it's worth. That's exactly what's happening with our regular currencies. Governments print more money, but that doesn't mean it's worth more. It's the opposite. As the value of paper money goes down, the value of precious metals like gold, silver, and platinum usually goes up. Think about gold. It's not just a piece of jewelry. It's a powerhouse in your investment portfolio. For example, an ounce of gold that cost about $400 in the 1950s is worth over $2,000 in 2023. Experts predict that it could reach as high as $10,000 per ounce by 2032. That's a massive increase. But how do you invest in gold without having to buy the physical metal? Easy. There are things called gold ETFs, exchange-traded funds. They are affordable and let you invest in gold without the hassle of storing it. Gold, silver, and platinum aren't just valuable because they're rare. They hold their value even when everything else seems uncertain. That's why they're a smart choice for anyone looking to keep their wealth safe and sound. 2. Industrial commodities: the power of raw materials. Now, let's dive into the world of industrial commodities, like cobalt, nickel, and copper. These are not just metals, they are the unsung heroes of the industrial world. Their value lies not just in their rarity, but also in their indispensable role in various industries. Take silver, for example. It's not only used in jewelry, but also in electronics, medical devices, and even nuclear reactors. Its versatility makes it a valuable commodity. Similarly, metals like cobalt are crucial for making batteries, especially for electric cars. Did you know that the price of cobalt has doubled from $20,000 per ton in 2012 to $40,000 in 2022? That's a 100% increase in just a decade. But how do you invest in these metals without buying tons of physical material? Here's the trick. You can invest in the stocks of companies that mine these metals. Companies like Rio Tinto are great examples. You can also consider mutual funds focused on mining, or even explore futures and options in these commodities. Investing in industrial commodities means you're putting your money into resources that the world needs and will continue to need. It's not just about owning a piece of metal, it's about having a stake in the very building blocks of modern technology and industry. 3. Safe haven currencies: stability in turbulent times. Moving on, let's talk about something a bit different: safe haven currencies. These are currencies like the Swiss franc, British pound, and Chinese yuan, known for their stability even in economic turmoil. Why are these currencies so important? Well, in times of uncertainty, like a financial crisis or political unrest, people look for safe places to keep their money. Haven currencies come from countries with strong, stable economies and political systems. They offer a shelter against the storm. For instance, the Swiss franc is a prime example. Switzerland's economy is one of the strongest in the world. During crises like the Eurozone debt crisis or the 2008 financial meltdown, a lot of money flowed into Swiss banks for safety. And this isn't just about big investors or millionaires. With currency ETFs and forex brokers, even small investors can put their money into these haven currencies. You don't need a Swiss bank account. With as little as $100, you can start investing. Investing in safe haven currencies means you're choosing stability over uncertainty. It's a smart move for protecting your wealth against sudden economic shifts. 4. Sovereign guarantee. Investing in government strength. Now let's explore sovereign guarantee. A fancy term, but it's essentially about investing in government-backed securities. These are investments that are, in a way, guaranteed by the strength and stability of a country's government. Have you ever looked closely at a dollar bill? It says, "This note is legal tender for all debts, public and private." What does this mean? Well, it means that the government backs the value of that money. Since no currency today is backed by physical assets like gold, it's the government's promise that gives it value. But why should you care? Because investing in government securities is one of the safest ways to grow your money. Governments, especially stable ones, rarely default on their debts. For example, in the US, you can invest in treasury bills, notes, and bonds. These are not just safer than keeping cash, they also offer better returns. For small investors, this is a golden opportunity. You can buy these securities directly from the government through portals like Treasury Direct or from secondary markets. This means you're not just saving your money. You're lending it to one of the strongest entities in the world, your government. It's a way to ensure your money grows with the backing of a sovereign guarantee. 5. Value stocks and mutual funds. A steady path to growth. Next up, we delve into the world of value stocks and mutual funds. These are not just any stocks. They are the ones with solid fundamentals, offering stable growth and often dividends. What exactly are value stocks? Think of them as the stalwarts of the stock market. Unlike high-risk growth stocks, which are based on potential future gains, value stocks are often from well-established companies with a strong track record. They're like the steady, reliable workhorses of your investment portfolio. For example, a company like Nucor, dealing in industrial metals, represents a value stock. It's less risky due to its established market demand. Investing in these types of stocks means you're likely to see steady growth and receive regular dividends. But researching each stock can be overwhelming, right? That's where mutual funds come in. Specifically, dividend-focused mutual funds. They pool investments from many people and are managed by professionals who pick a variety of value stocks. This means you get a diversified portfolio without the hassle of picking each stock yourself. Funds like the Vanguard High Dividend Yield Index Fund are perfect examples, offering a blend of stability and income. So investing in value stocks and mutual funds is like choosing a path of steady, reliable growth. It's about making your money work for you in a balanced, less risky way. 6. Land and real estate. The everlasting value of property. Now, let's turn our attention to land and real estate, one of the oldest and most trusted forms of investment. Why? Because land is something that doesn't depreciate. Its value almost always goes up over time due to its scarcity and constant demand. Think about it. Land is essential for everything: homes, schools, factories, agriculture, and more. As the population grows, so does the demand for land. This makes investing in land and real estate a powerful way to safeguard your wealth against inflation. But it's not just about owning a huge piece of land. Real estate can be as accessible as investing in a small apartment or even a share of a commercial building. According to a Bloomberg study, housing prices have tripled between 1992 and 2020. This shows the long-term value growth of real estate. For those who think real estate investing is out of reach, there's an easy entry point: REITs, or real estate investment trusts. REITs are like mutual funds for property. They allow you to invest in real estate without owning physical property. One popular example is Ventas Inc., which invests in healthcare-related real estate. In short, investing in land and real estate means you're putting your money in something tangible, with a demand that's as old as time itself. It's not just a piece of the earth, it's a piece of the future. 7. Collectibles. Investing in unique treasures. Finally, let's explore the intriguing world of collectibles. This is about investing in unique items like vintage cars, rare art, luxury handbags, limited edition watches, and first edition books. These aren't just items. They're pieces of history, art, and culture that can increase significantly in value over time. Why invest in collectibles? Unlike regular items, collectibles are often appreciated. The rarer and more sought-after an item is, the more valuable it becomes. For example, a vintage car's value can soar far beyond its original price, becoming more precious as it ages. The same goes for artwork. A painting bought today could be worth a fortune in the future. But here's the thing. Investing in collectibles isn't just for the ultra-rich. Thanks to the internet, there are online marketplaces and platforms where anyone can buy, sell, and even own shares in collectible items. Websites like Whatnot allow you to trade in rare items like baseball cards and comic books, while platforms like Masterworks let you invest in shares of fine art. So when we talk about collectibles, we're talking about investing in something that's not just financially valuable, but also has emotional and historical significance. It's about owning a piece of rarity that not only brings joy, but could also be a wise financial decision for the future. Conclusion. In conclusion, keeping your cash in the bank might seem like the safe and traditional route. But as we've explored today, there are a myriad of other assets that offer not only safety, but also the potential for greater returns. From the timeless value of gold and real estate to the exciting world of collectibles, each of these investment options opens a door to diversifying your portfolio and safeguarding your financial future against inflation and economic shifts. Remember, the key to successful investing is not just where you put your money, but also how you spread it across different types of assets. It's about making informed choices and understanding the unique benefits and risks each investment brings. If you found this video informative and want to stay updated with more insights on personal finance and wealth management, Don't forget to hit the like button, share with your friends, and subscribe to our channel. We're here to help you navigate the complex world of finance with ease and confidence. Also, we'd love to hear from you. Drop a comment below sharing which of these investment options you find most intriguing, or if there's any other topic you'd like us to cover in future videos. Your feedback is valuable to us. Stay smart with your money, and remember, the best investment you can make is in your financial education. Until next time, keep exploring your options and making wise investment choices.